Good morning, I'm Robert Tan. From your wallet to the wider economy, join us as we follow the money. The headlines on the U.S.-Iran war keep changing. De-escalation one day, disruption the next. The uncertainty itself is becoming an economic risk, especially for a vulnerable country like the Philippines. And joining us now is Michael Ricafort, RCBC Chief Economist. Good morning, Michael, and welcome to Follow the Money.
Good morning, Mr. Robert, and to your viewers. Nice to be back.
Michael, let's start with inflation. When officials say inflation is under control, are they talking about reality or just a slowing rate of increase from prices already felt by households?
Well, it's really more of the latter, Mr. Robert, because, well, at the very least, we've seen global oil prices already easing with the West Texas or the benchmark U.S. Crude oil price already at $74 per barrel. So that's already the lowest since, in more than 3.5 months. It's March 4. And it's already significantly lower from the peak, the early part of the war on Iran and Middle East, around the early part of March. The peak was $120. So that's significantly lower already. And that's close to the, a day before the war, it was at $67. So maybe just $7 or less. We're practically back to the levels.
So does that mean, Michael, even with the uncertainty that's happening right now at the Strait of Hormuz, we're still seeing that the road ahead, that everything's easing?
Well, at least, the inflationary pressures already eased. Of course, but the reality is, the parameters are similar still to 4 years ago during the Russia-Ukraine war. It just happened now, it's much faster, the so-called downward correction from above $100 per barrel, just like in previous cycles, 4 years ago, 8 years ago, and even 20 years ago. Whenever oil reaches above $100 per barrel, there's a tendency for it to normalize lower because of, first, there's demand destruction. People around the world, businesses and other institutions, they do adapt. They reduce reliance on imported crude oil. And of course, if oil is expensive, if energy is expensive, they tend to reduce their demand. So that's a so-called demand destruction. But this time around, it took close to 4 months from above 100, in this case, from $120 high. That was in early March. Now it's at $74. Comparing it to 4 years ago, it took about 6 months.
But Michael, if headline growth is slipping to around 2.8%, what does that actually say about the underlying strength of demand, investment, and confidence in the economy today?
Of course, that's a reality, Mr. Robert. There may be some stickiness in either the relatively slower economic growth, as well as inflation would still be there because the price adjustments already made, and of course, we need to acknowledge other things other than world crude oil price. Well, a rollback of more than 10 pesos would bring diesel prices already closer to the levels before the war. It started at around 50 pesos to 60 pesos per liter for diesel. Before any large cut, the latest large cut today, it was like as low as 60 to, not really 60, but 70 to 80 pesos per liter. So, so we're moving closer to the pre-war level. So that's just one aspect. However, we have to look at other things, Mr. Robert, like the dollar peso. It's back to 61.30 levels. So it's back to where it started. Last week we saw a decline to as low as 60.23 last June 17. We ended the previous Friday. That was during the Independence Day holiday weekend. Back then it closed at 61.35. Then suddenly we returned to work after the holiday. So it appreciated to 60.70 to as low as 60.23 in the latter part of last week. Now it's back to where it started. That's around 61.30 levels. So yeah, that's still elevated. Meaning to say, Sir Robert, since the start of the war, the dollar has gone up by around 6%.
Yeah.
So it's similar to the other currencies in Asia. Meaning to say, just the exchange of money alone, whenever we import, we need to pay 6% more since the war. So that's part of the inflation that we're seeing also. Other than oil price, it's also the exchange rate. So whenever, all the items that the country imports, there's already an increase to that, an increase of about 6% for the past 4 months. And it's not, it's also similar to the other Asian countries like Indonesia, South Korea, India.
But all that, Michael, all that looks really good on paper. But then when you look at everything that's happening on the ground, what's happening, how it's being felt on the ground by the average Filipino workers, it's still a phase where we're still tightening our belts. And when outside observers look at us, they always say we have a resilient economy. But at this point, when we say resilient economy, does it stop being a win and start becoming a cover for a weak momentum?
Well, first, there could still be risk of stagflation. Although technically we're not in a stagflation. We have a slow growth, as you mentioned, 2.8%. There's a chance to see an average growth of this year around 3 to 4%. So technically that's not stagflation because there would be catch-up spending by the national government. That's a missing element, actually, Mr. Robert.
You mentioned that. So when you're mentioning that missing element, now what happens to the growth when a key spending driver, like what you've mentioned, infrastructure, now loses momentum? Now, what shows up first in the economy and what needs to change?
Well, if you look at the latest infrastructure spending data, it's still down by like about 40% at least year on year. That's
Latest,
the month of
it's
April.
over 50%.
Yeah, almost around 50% year on year decline. So meaning to say, we have really yet to see that delivering. That's what everybody's waiting also to. Well, it's like a pump priming the economy, and hopefully that's already based on better governance standards, starting with the national budget this year, which was approved January 5, and that's already based on better governance standards. And going forward, the commitment also with the priority legislative reform measures, also a lot of them in improving the governance standards of the country. The anti-corruption measures, in particular, the anti-political dynasty bill, the reforming the party-less system, the Cadena bill, and as well as the creation of an independent people's commission. So it's all anti-corruption. It's really meant to address the underspending late last year because of the anomalous flood control projects. That's really the main culprit until now.
Michael, but some would argue that's taking a bit of a long time. It's kind of dragging on. And to top it all off, besides the slow infrastructure projects and growth, if we look at consumption and remittances, they're carrying the economy while investment and infrastructures are low. Are we kind of building capacity or just sustaining demand right now? Where's the balance? Where can we strike the balance in terms of the investments, the slow infrastructure spending, and the demand capacity that we're seeing today?
Well, the stimulus really is the accelerated government spending, especially on infrastructure, to make up toward the slowdown since the latter part of 2025. And of course, this is hinged on better governance standards. If indeed the legislators, the lawmakers would really push that through the, of course, as part of the priorities of the LEDAC. And that's very important, Mr. Robert, because that would, the increased government spending as well as the governance reforms to better level up governance standards, anti-corruption measures, that's going to help improve the sentiment and the confidence of investors. Because late last year, when there was underspending, some of them are on a wait-and-see attitude. So now that would help. That would be the two-pronged, the twin effects of the benefits of stimulating. Of course, that's already the commitment of the economic team. So we hopefully we'll see that later this year, especially the second half. We'll be coming from a low base. Hopefully, well, the second quarter, because came from a higher base mathematically, that could still remain relatively slow. That could still be similar to the 2.8% that we saw in the first quarter. And hopefully by the third quarter, with the catch-up spending, and of course, with the catch-up spending and the implementation of the reform measures, that's variable upon our lawmakers, and of course, the overall priorities of the administration in cooperation with the lawmakers. So, well, that would help.
It will
That would
depend
also
if that
boost investment.
is realized while waiting in terms of what will happen in the third quarter. But Michael, we still have much to discuss. We'll continue this discussion after the break. Keep following the money. Welcome back to Follow the Money. You're still tuned in to our conversation with RCBC Chief Economist, Mike Ricafort. Now, Mike, before we go on our discussion with the issues in the Middle East, I'd just like to ask you, we had Marvin Fausto of Coal Strategic Growth Fund last week, and it was quite concerning what he mentioned regarding the stock market, wherein he mentioned it's those who are investing locally, domestically here in the stock market, is only 2%. Do you have that kind of data? And for you, is that also concerning on your part on how the stock market is here in the Philippines right now? What's happening, especially being affected not just by domestic issues, but also by global issues?
Well, that's similar to, I've been covering the Philippine economy and financial markets and various businesses and industries for the past 20 or even 30 plus years. So that's consistent. Those, we have yet to see further, when it comes to financial literacy, there's more needs to be done to increase the ownership of Filipinos on, of course, in the financial markets, like in the stock market. That's true. And also, if you look at other metrics in the finance industry, like the insurance penetration is kind of similar
it's very
those
low.
levels. Yeah.
Yes.
Yeah, it's relatively low. So there's actually, if you look at it.
So where's the gap? What are we doing wrong?
Well, actually, it's really first. The first is the awareness, the financial education or the financial literacy. That would really help a lot. Because and then secondly, of course, is the increased incomes, the purchasing power of Filipinos that goes along with the awareness. And of course, it's for their benefit also to have those financial solutions. Say, if they're able to hedge their investments, they're planning for either, for their old age or maybe just to try to diversify and try to boost wealth. And also, for insurance, it's also part of the financial solution to protect themselves, their hard-earned money on their properties, their lives, the houses that they buy, the vehicles, etc. So, yeah, it's really providing security blanket and all the financial solutions and financial innovation. Although we have to look at it in another way, Mr. Robert, it's not just here domestically, it's a global perspective already from the point of view of the Filipinos. Because
and it doesn't help that we're in a crisis and people are still tightening their belts and they don't really have that much to save or to invest. So it's kind of a hard math there for them right now.
Well, yeah, but the solutions are there, Mr. Robert. You imagine, you can already invest not just here in the Philippines. You have all the choices here in the Philippines, whether it's bonds, money market, stocks, and so on. And here in the Philippine financial markets. But it's also, Filipinos already have access globally. Like, for instance, the various UITFs.
But like you mentioned, awareness is not there yet.
Yeah,
it's lack of awareness.
That's one, of course, especially on the mass market. But it's very much accessible. Filipinos can now even invest abroad in various, it's not only in the banking app, it's also available in e-wallets. So there's no more excuse, actually. But the thing is, of course, if you consider the masses, especially if you are kind of sensitive on the situation now.
Yes,
yeah,
living
true,
on
there's
a day-to-day basis, especially even now with the issues happening in the Middle East, the uncertainties. Right now, the Strait of Hormuz is either open, threatened, or partially disrupted, depending on the headline. Now, in reality, if we look at the markets, do markets actually know what's going on there, and how are we feeling it here? And how can we balance now, generating, let's say, more awareness for local Filipinos to put money in the markets, invest, even let's say 1,000, 2,000, 3,000 pesos, even if they're tightening their belts? And how can we educate them more so that building wealth is just not a dream?
Of course, it should be part of the educational system of the country. Yeah, because well, when I was a student, many years and decades back, so yeah, it's not really widely available back then. I only learned about this when I self-studied, and to some extent depends on the school, the business school that I attended to. So there, I was fortunate that I was given early exposure by, well, at least we had proactive professors to expose us in the markets. But it's not available for everybody
Yes.
around the country. So yeah, that's number one.
It's actually, it's still missing even in graduate school. You're taught about everything from operations, marketing, finance, but not really on how to use your money wisely.
Yeah, it should
You
be
do that-
there, Mr. Robert. Yeah, it's not just, well, of course, that and business per se, how to, it's really financial literacy, how to manage the finances well, earn money, save money, invest money, let it grow, and those things, those are the gaps, those are the opportunities. Hopefully, it becomes more institutionalized in this country, and you know. Well, of course, there are various disciplines that are taught, and that should include anything pertaining to earning money, be smart about money, and planning for retirement, and all of this. It's a lifelong journey. So, of course, the financial solutions. These are very important things that must be taught. You know,
Yeah.
people only learn this through. Well, of course, the mass media does help. All mediums of, and now of even social media, the traditional media with the vetting
yes,
process
education is
and
key,
everything.
Michael. Let's say if you had the ear of the DepEd secretary who has a budget of a trillion pesos, what would you advise in terms of the kind of learnings in schools today so that more and more people are attuned with their finances and how to invest, how to save at an early age?
Yeah, that should be included, especially when it comes to managing finances, how to earn money, how to manage it, how to manage success, how to manage the risk, let it grow. All about financial literacy, saving, investments, planning for the future, starting a family, how to finance, of course, the purchase of homes, of vehicles. Of course, those are on the spending side. And more importantly, how to be entrepreneurs, create more business, and let the money work more for the Filipino by investing them in various financial investments, securities. And of course, more importantly, what are the legitimate ones? What are those approved by the SEC? And, you know, it's also preventing Filipinos from being duped into the various schemes, the various, you know, the fraud, etc. So these are very important things. It's an integrated approach. You know, the schools, the education system. In fairness, yeah, it's training future professionals. How to work as maybe work for on a in a corporate setting, in a government setting, institutional setting, but it's also equally important to manage personal finances and the household finances and how to grow wealth. What are the other alternatives for a student, for the future, for their sources of wealth? Because you know, as the saying goes, sometimes entrepreneurship is not really taught in whole in school. Sometimes it's learned by with those families that are already into business and into
Yes.
investments
True.
and all those financial solutions. So those
We still have a lot to do, Michael, on
in this
that
time
point.
and age,
Yes.
we need that. We need that, to make, at the very least, we're vigilant with the right kinds of investments and not fall trap into
Yes.
the scammers, the fraudsters.
Oh, yes,
And,
definitely.
in this, especially in this age, it's becoming more digital. It's becoming more globalized. Not only that, it's not just traditional banking, traditional investments.
Yes.
We now use the digital solutions using our phones, the banking apps, the e-wallets, and
More to learn.
and of course, cybersecurity
Yeah.
is part of it, and we need to manage also those risks
Okay.
pertaining to managing cybersecurity as
Yeah.
well, Mr. Robert.
Okay, Michael, let's now move on to our rapid fire segment. You just have to answer yes or no. No need to explain your answer. Let's start with this. Is the Philippine economy more fragile than official statements suggest? Yes or no?
No,
Can inflation stay contained if global oil spikes again? Yes or no?
yes,
Would spending more government money to drive growth do more harm than good? Yes or no?
more good.
Okay, is 6% growth era over for the Philippines? Yes or no?
No,
Is economic stability now more a narrative than reality? Yes or no?
reality.
Okay, and finally, Michael, if global shocks can still dictate inflation, oil prices, and growth expectations, what part of the Philippine economy do we actually control anymore? Just a quick answer.
Well, of course, the discretionary spending, of course, the pump priming of the economy, government spending. We need to deal with El Nino also, other than the geopolitical risk when it comes to managing inflation.
But what can we still
you know,
control? What are still within our control?
Well, of course, in managing inflation, monetary policy, that's to better manage inflation and inflation expectations and bring back the target towards the central bank inflation target. And then the monetary authorities, not only here but worldwide, they've been fairly successful 4 years ago.
Are you
and they can do it
optimistic in
now.
seeing that towards the end of the year?
Yes.
Okay. On that note, Michael, thank you very much for joining us this morning and sharing your insights and advice to our viewers. Thank you very much.
Thank you so much, Mr. Robert and your viewers. Nice to be back. Have a blessed morning, everyone.
And that's all for today. I'm Robert Tan. Thanks for watching. Keep it here on the Bilyonaryo News Channel. And always, follow the money.